20% off lows seen earlier this month, while Asian markets have lagged, especially those in Southeast Asia. But our next guest says Asia is starting to pique his interest again. Mark Fuchs is CEO at Fuchs Capital Partners, joins us here live on set at our Asia headquarters. Mark, welcome back. It's been a while. The big picture, of course, we've rallied off early March lows, 13-year lows. So technically we look like we're in bull market territory, but the contra indicators, the VIX is still looking a little bit worrying. Spreads have not come in as well, and valuations, especially at the U.S. side, aren't really that attractive yet, are they?
Yeah, no, it's I'd love to be optimistic, and I think that it's much more of a trader's market right now than an investor's market. Yeah. If you look historically, you know, the market should be, the VIX should be below 40 before we really actually see an improvement. The spreads above, the TED spreads, it should be much lower than where they are currently. Yeah. And valuations on a PE basis in the U.S. is roughly, depending on your number, of whether $40 to $60 for S&P, could be anywhere from 14 to 17 times. So it's hardly cheap. And from a point of view of housing inventories, they're still over 12 months. And also corporate earnings as a percentage of GDP have fallen among the most on record. So indeed, the fundamentals are not there yet, but you know, a trader's market, yeah, it was overdue for a bounce, and that's what we saw. Indeed.
Okay, but it's just a bounce here. Is it more a question of just giving the Fed's $1 trillion plus intervention a bit of time to work? They've only been in the market, about a week or so, and they're intending to buy, I think, $12 billion a week. I mean, so far, we haven't really seen the 10s come down that much, have we?
No, and I think that, you know, typically when you see the kind of contraction we're seeing both in the U.S. and globally, yeah, it tends to take 2 or 3 years from a global contraction for a recovery to occur. So to say that we're done with that is probably a little bit on the optimistic side. But that said, we can't ignore flow, and there's a lot of cash on the sidelines that's looking to trade the market. Investing is probably a little bit premature.
All right, what are you doing with the cash in your fund with regards to Southeast Asian markets then?
Well, Southeast Asia, the beauty, and I'm talking my own shop here, is that there is a diversity of returns across each of the development cycles. So from the most developed economies such as Singapore to the emerging markets such as Indonesia and Vietnam, Singapore and Malaysia, little bit rough because they're exposed to the global economy.
They're the most open, yeah.
They're the most open. But that said, Singapore has come down a bit from where we were originally underweight it. Malaysia, on the other hand, a little bit more concerning to the extent that it's got among the slowest growth that we project out there for the ASEAN economies.
Is Najib going to make a positive difference?
Najib will make a positive difference. He is among the most qualified people, and he's got very qualified people around him. Yeah. So I'm quite optimistic on that. It's just the valuations are not that cheap, and you probably are only just starting to see a slowdown coupled with commodity prices and also higher fiscal the expenditure that they're using on oil for fiscal balances is probably going to put under pressure for them.
All right, the Singapore story probably the most affected because it is the most open, but does that mean also that it will likely be the first to bounce back once we do see recovery gain traction?
Absolutely, yes. The Singapore, both for its openness and also the first-class policy initiatives that the government is implementing, is indeed something that's going to be very, very interesting when we're on the other side of the recovery. It's a little bit early now, but in the medium term, Singapore offers a first-class infrastructure and a first-class market.
All right, we'll talk more in just a bit. Mark Fuchs there, live on set with us at our Asia headquarters. We'll continue chatting coming up in just a bit. And a little bit later in the show, China's top miners and oil companies are all flagging a pretty rough year ahead. Details coming up in the next 30 minutes of this show. Don't go away. Squawk Box Asia on a Monday morning. We're back with Mark Fuchs, CEO at Fuchs Capital Partners, staying with us here on set at our Asia headquarters. Mark, we talked about Singapore. We talked about the Malaysia story. Let's get to some of the, I guess, slightly less talked about markets. Thailand, Indonesia, Manila. Where do you stand on them?
Okay, Thailand, we're a little bit still cautious to the extent that it's actually looking at -3%, -4% growth. I think people had assumed that the economy would hold in better than it has. You've actually got the impact from slowing exports on electronics, also autos now, tourism. So it's not actually doing as well as we would like to see. That said, the valuations are very attractive. It's among the cheapest in the region at around 8 times earnings. But obviously politics continues to weigh.
I was going to say, do you think, how much of a worry is it that politics could get hijacked by the opposition? I mean, we've had demonstrations again and continuing to do so, not liking what the current government has been trying to do. They're saying, look, this is just like back in Thaksin's days, you're handing out money and they're still unhappy.
Yeah, I mean, I think that there are concerns, but nevertheless, you know, when you actually look at the texture of the crowds, the size of the crowds, the duration, I don't actually see them as being particularly pernicious to the current government. Many of them are rent-to-crowd, frankly, and I don't actually see it being a short-term concern. Medium-term, I think if the government does the right thing, they will be able to stay in power. It depends largely on what the next 6 months holds, I think.
Okay, unusually, in terms of macroeconomic fundamentals, you've got Indonesia probably looking like the strongest of the lot out here in Southeast Asia. Huh?
Yeah, I mean, in contrast to a -3% in Thailand, -4%, Indonesia could come at a +3% growth, which is very positive. You've got an improvement in the political situation, probably a smooth transition. You've got initial parliamentary elections coming up shortly. It looks like it'll be business as usual there. And I think that when you look at the combination of the low dependency on international exports, coupled with a very strong consumption-based economy, low interest rates, the bond market has done very well recently, which usually is a sign for the stock market to follow shortly, and valuations are not too stretched. We actually like it. The irony is that a few years ago, Indonesia used to trade at a discount to Thailand because of the political and macro conditions. Now it's the opposite. Indonesia trades at a premium valuation to Thailand.
Is that deserved, though? Because, I mean, we were down there just, several months ago for an extended period, and one of the things that really caught my attention was the fact that since Suharto's fall, one huge fundamental change has been not just income and wealth distribution, but the whole model has changed. It's not just Java, Java, Java. It's decentralization where the money actually comes from, where they take commodities out of the ground. They're letting the provinces keep more of that. But with this recession, with demand for commodities so soft now, what then?
Well, the government actually has already implemented an 18 million person strong distribution, 200,000 rupees per person, and they are being very, very deliberate in making sure that the provinces are being treated a little bit more equitably than they've seen in the past. Okay. So that's been a very favorable development. But if you look more importantly at a bottom-up level, the ratio of upgrades to downgrades in Indonesia from a bottom-up perspective is actually among the highest in the ASEAN group.
Okay, interesting. And you know, we can't leave off without talking about the Philippines. What's going on down there?
Well, again, Philippines, like Indonesia, will probably come in at 2 or 3% positive growth. They've got a positive current account surplus, and unlike many of the other countries such as Malaysia or Singapore, even Thailand, is not particularly exposed to a lot of the export markets. Equally, there was initially concerns that remittances would fall. Thus far, we haven't seen any meaningful data to suggest that. And you know, overall, the market's actually doing pretty well. Okay, all
right. Real quickly, Mark, before we have to let you go, your fund kicks off later this month. Strategy? What are you guys going to be doing?
Well, I mean, you know, we're equity long-short funds, so we don't necessarily take particularly articulated beta views. We're generally beta market neutral. Right. So we would not really, we would just basically take overvalued companies and short them and go long undervalued companies and buy them.
How much leverage?
Not more than 2 times leverage. We want to, you know, what killed most funds was both over leverage and illiquidity. Indeed. We want to avoid both of that. All
right, sounds pretty conservative and wise. Mark, we got to go. Great to talk to you, sir. Thanks for dropping by this morning.
Thank you.
We've been talking to Mark Fuchs from Fuchs Capital Partners here on set at our Asia headquarters.